So, buy to let has changed significantly over the last few years. Currently, in 2026, many landlords are asking the question that, you know, I've heard so many times right now, and it is whether buy to let is still worth it. So, in today's video, I'm going to explain what's changed, what still works, and how smart investors are adapting, and my answer to if buy to let is still worth it in 2026. So, let's get into it. Craig Parker here from Parker's Property Sourcing. Coming at you with another video today. And today's video, just going to be talking about buy to let in 2026. Is it still worth it? What's changed? How you can adapt? So on and so forth. Really hope that you are enjoying the channel. Make sure you like, subscribe, share. It helps me out. It helps you out. Because if once you start liking and subscribing and sharing to my videos, I'll show up on your algorithm. You get to see all my latest updated videos. I talk about hot topics in property, different property strategies, and I give away a lot of nuggets to finding below market value deals. So please enjoy, like, subscribe. So what's changed in buy to let? Higher interest rates have increased mortgage costs. That's a big change. From, let's say, 10 years ago, 15 years ago to now, interest rates are very high. Another massive change in the buy-to-let market, in the property market, is tax changes. And that has really reduced margins. So running a buy-to-let at the moment is now more professional and numbers driven, as opposed to back in the day where anybody could just get into it, get themselves a buy to let, put a tenant in it, and be making loads of money. It's changed. However, the demand for rental property remains extremely strong. Affordability constraints keep many tenants renting for so much longer, and population growth and migration continue to support the demand. So an exercise that I like to do when, looking at properties, when I'm looking at a deal, a buy-to-let deal, I like to check the demand in the area that I'm investing in. And currently up north, in little pockets up north in certain areas, the demand is so strong, so strong. There's more people looking than what's actually available on the market, which tells you that the demand is high. So for me, the rental demand at the moment is as high as it's ever been, which is always a really good sign if you're somebody that wants to get into buy to let. And the truth is because tenants aren't going anywhere. They're not disappearing. So the demand is very, very strong. Here's some more good news. The rental market is stabilizing. Very, very stable. Very, very predictable. So when you're looking at your deals and you're looking at your property investments, your potential property investments, you can see that after years of sharp rent increases, the growth has definitely slowed down, but rents are still, rising, but it's not at a crazy pace that they have been rising. It's very sustainable now. It's at a sustainable pace. So what this does is it creates predictability rather than explosive gains. So for me, again, when looking at a property deal and looking at the rent, you can now look and say, okay, well, I've fixed my mortgage, or I'm going to fix the mortgage interest rate for 5 years, and I'm probably going to have this tenant for 5 years, and I can see what rent I'm going to be getting for the next 5 years. So very, very predictable, and it's good. So you can actually have a look at, what your investment's going to be giving you within the next 2 to 5 years time. And then let's have a think about where buy to let still works. And I would say high yield, high return on investment areas really are outperforming capital growth only areas. So I would be recommending to be looking at both good return on investments, good yield areas, also with a nice steady capital growth. So not either or sort of thing. Another good thing to be looking at is the smaller units, your smaller buy to lets, your 2 and 3 bed houses sort of thing, and also your HMOs remain very very resilient. Um, so that's two things to be looking out for. Your boring vanilla buy to lets and your HMOs are very resilient in today's market. Professional tenants value quality and stability. It's very, very important to know this. You want to get yourself a professional tenant in for long term, they want quality and stability. And you can get that in your normal, boring vanilla buy to lets and your HMOs. And here's a common mistake people are making, or buy to let landlords and investors are making in today's market, and it's over leveraging is the massive, massive risk. So what I mean by that is you're buying without stress testing, stress testing interest rates, void periods, things like that. It causes so many problems. So to invest and just to rely on capital growth alone, right now is very, very dangerous because it costs you so much money. So I always talk about investing in your education, and what I mean by that, in a nutshell, is you invest in your education. So when you're looking at a deal, you know exactly what you're doing, what you're looking for, how to stress test, how to work out your return on investment, how to work out, is this deal going to be good if my interest rate goes up 1% or 2% over the next 5 to 10 years, or 3%. These are the things you got to look out for. So stress testing is so, so important. Smart investor strategies for me would be buying below market value. It helps improve resilience. Buy below market value, and then when you buy the property, you push the value up even more by your refurb, so on and so forth. Really, really important to have that in the back of your mind. Focusing on return on investment and cash flow is very critical in today's market. Very, very critical. And then lastly, I would say long-term planning would always beat speculation. But as I just touched on in the previous slide, looking at deals 5 to 10 years down the line, you can't predict what the interest rates are going to be. You can't predict what, the insurances and all the running costs are going to be, but really push it and put it to the test. So and you're sitting there comfortably knowing that, okay, if these things start to rise with inflation and so on and so forth, I'm still going to be making the return on investment that I want on this property in 10 to 15 years' time. So we've come to the end of the video. My final thoughts and my answer for 2026 buy to let is not dead. Buy to let has evolved, and it now rewards disciplined, informed investors. So as I've said in today's video, buy to let is definitely something where you can build long-term wealth. You can get good return on investments. You can get steady monthly cash flow. So we just got to make sure that you're educated, you're invested in high demand areas with nice steady capital growth. Really hope you've enjoyed today's video. I've been Craig Parker. Don't forget to like, comment and subscribe. And in tomorrow's video, I'm going to be talking about current interest rates and inflation in 2026. So stay tuned, like, comment, subscribe. See you again soon.
you.